solve a mystery or rewrite history. DuckTales, woo! Every day they're out there making DuckTales, woo! Tales of daring, do bad, and good DuckTales. Danger! Watch behind you. There's a stranger out to find you. What to do? Just grab onto some DuckTales, woo! Every day they're out there making DuckTales, woo! Tales of daring, do bad, and good DuckTales, woo! Not ponytails or cotton tails, no DuckTales.
What's good? What's good? You know, my family, we back. It's time to recoup. Let's get it. First off, checking up this Robinhood portfolio so far, holding at 1621. I was like I said, I sold off at 1621. And let's see what next week brings. See can we can buy back in, but I have no buying power. As you can see we click on there, give us a little info. We down 0.01, $2.41 today on this Saturday. You see, I got 60,000 locked option collateral, individual cash 58,761. Go down to equity where the money at. That's loose. I got about 300 in Intel. Like I said, we wanted to dollar cross the Intel. This Defiance. Like I said, we was heavily. They did a major dip last week. Well, yeah, this week, and it's kind of recovering. So check out Defiance Bull ETF. Like I say, we aggressive on anything bullish ETF, especially if it's 3 times leverage. That's like a brainer, no brainer. And if that bottom out, easy money, guys. So just think about that. A literal tactic could be going after leverage bull ETFs, 3x leverage on a major dip. So anytime we have a major dip in this, you know what I'm saying, they talking about it on the news, put this in your arsenal to get rich. Go out to the bull ETFs. You know what I'm saying? I didn't even realize you can trade options. Let's see if they how far they is. They're about 200 days out. So put the 30s. I want that bitch at like 19. That'd be 100. How much would that charge me? Oh, I ain't got that much. See, look, this one ain't got bread yet. 200 bands? Yeast. We need if you gonna play the cash secure put where you gonna have them bands. But like let's get into I had a comment. What comment was that? It says something about the portfolio 6 months ago, bro. At 7 bands. Crazy. 2025, let's get it. Mhm. Was it on this one? No, it wasn't on this. Basically, the comic told me look at EMKR. I don't know if it was like a spam, but it's in aerospace and defense. And that kind of plays into what I just showed y'all. This Defiance. I kind of moved that on my radar based off that dip. So defense bull, aerospace. And he just happened to mention some EMKR. Told me look at. I'm not really key on looking at things, but like I say, I look at this thing, I'm thinking, okay, wearing up January 29th for the 6th. Then they just wiped that bitch down. 70. It was up 40. came down 80. So they dropped it down 140. It recovered 75 to 30. So it's back at being down like 100%, 120%. They got plenty room to run. So if it debuted at that's the 2000. Okay. I mean, this look like a trash, but like I say, I'm a dollar investor, so I definitely will play with this. Far as like based on this bull flag right here, so this thing could come back down to like 196, 193. Thing gap. Looking at the 1 year, it definitely look like it can gap the bull flag. Okay, you can see how this how we just gonna get in there. Mind I start to grab some of this Monday market open. But yeah, whoever's check this out. All right, we locked in. We gonna see. We gonna play with this one. We gonna see what it's talking about. Met two criteria. You know what I'm saying, the dip and this little recovery he's doing. So hopefully we can get it to do another dip. EXFY. I just want to get some spotlight on Expensify because I've been talking about this shit like for like weeks, bro. I've been in and out of this stock. So that was a harem. It's been on a banger. It's still out that I sold mines, but it's never too late to get on the stock when you at the bottom like this. But check out Expensify, guys. Cloud. Maintenance requirement is coming down. It was at 100% maintenance, so was another key factor. Average volume picking up. Let's look at some options. On some calls. Need to buy some calls on this shit. Let's see. 10. 10 is like having 1,000, like 3,000. So 50 calls. It's like gambling. You gotta be sure, you got dollar cost average into these calls. So 185. How about you sell a put? The fuck? Sell a put? 2,000 in price. Previous closes they was 1 cent. Would be worth it. I think it'd just be better to buy the shares in this case. I'm like really and then just like caught up because like it was just dollars 82, 282, like on the call, load up on calls, 100 days out. contract. You exposed it to like 10,000 shares, if I'm not mistaken. What y'all think? Y'all think these motherfucking cars gonna be the banger? I got them on my watch. I think the cars gonna be if I put on my watch list. Oh, I bought them bitches for 15. Them bitches can let's keep going up. Let's see. We're gonna have to look into that shit because yeah, man. But yeah, but let we want to talk about. We want to talk about Warren Buffett, cigarette, cigar butt, invested. I'm all like, man, let's get it, man. We're gonna start this stream. Let's get into this money. Buffett all about the money. Well, basically, the boy Buffett been beating the market. How much some Berkshire out, bro? He used to own some of this shit, bro. Oh, 400, bro. You could buy some of this shit up, bro. I bought it at 320. And on the dip too. Oh shit, broker share Hathaway is on a dip. 1,000%. I'm gonna put some money on this. Definitely want to catch this on the dip. Yeah, let's add Berkshire Hathaway to this goddamn pool. Well, and I like the maintenance price 25%, so we can actually 25% this year. Date ran another year coming. Coming into 25, we can have a year all time, another year all time highs, or we can have a year of like to the bottom. So either way, we coming into a good position to get some of these blue chips. So add Berkshire Hathaway. His biggest holdings is like when yeah, so it's gonna be like brain no brain. The whole concern for at 67. I got Robinhood Gold. They saying it's 467. I mean, that really doesn't matter. I'm just you see, I got no money. See what I can do. Do I got any? transfer the money over, but I'm just gonna sell some crypto. No, I got like $1 and some Shiba. A lot of my Shiba right quick. What is we got a reminder to buy some of this Burke. Start putting this in the retirement as well. Let's grow with it. Gonna be dead. This shit in the retirement tucked off. No cap. Gonna do his. He like he said. He say never sell. In fact, to a YouTube video. Well, matter of fact, let's just. I opened a bunch of tabs. Let's go to these tabs. Top 25 stocks and SP5. But I was looking at sectors. So check these sectors: energy, communication, utilities, finance, information technology, building materials, healthcare, and aerospace. So basically, when we weigh in our portfolios, you got to think about this shit. So 2025 moving forward, we got Elon Musk, right? You got to get into the goddamn information technology, aerospace, and finance and energy. I'm saying we gonna be weighed in that shit, but you cannot sleep on the healthcare and the real estate, the REITs, REITs. Is I'm saying that right? You can own the McDonald's. They leasing the healthcare. Like, as long as you in this shit, you gotta weigh this shit in your portfolio. So look, largest industries thus far, technology. So when we go on a major like dip, a sell off, I don't call it a sell off. I call it a wealth transformation. When motherfuckers trying to retire, they trying to get out. But technology is gonna be the first thing to fall. Gotta buy these dips. The next thing, the financials, the birth shares, the goddamn Morgan Stanleys, the goddamn Black Rocks. When them dips, like previous, gotta pick up those along as healthcare. So you just use the Google, look at the top five, top six, and go after the dips. Consumer staples that's gonna be like shit we use every day, like Procter Gambles. You shit what I'm saying? Kellogg's, Coca like shit that you use, wash up and shit like that. That shit gonna always be energy, no brainers. Excel, everybody gotta pay energy bills and shit. Like Excel Energy, Walmart. Like if you're gonna be paying the bill anyway, I think it was XEL or XL. Okay, XL Energy. I think it was like 60 went up. Basically, it's this kind of the common sense shit. What else was gonna be on this bit? Oh, I was just getting a topic of shit like this. So based off like the top energy, what a little picture. You don't know that waste. All right, I was trying to show our REITs, CFs. Okay, like all different type of REITs you can get into, and think about hedge funds, bro. Sometimes you gotta be a part of it. You know what I'm saying? You got to make sure you own some of the shit that's actually doing the shit, that's placing the orders, market makers and shit. So what I mean is like the type of exchanges on the stock market. Like, I'm bringing y'all this shit that straight no brainers, but you're not thinking. So check this out. You can go own this in your portfolio. You know what I'm saying? So the Nasdaq, I push strokes stocks. Right. So check out all these exchanges you can have. Dow is on a dip. Should be allocating some of this. I need to make a list or a spreadsheet. Notes or sticky notes. Yeah. 'Cause I think it's definitely time to go knowledge cost averaging back in this shit. I got a bunch of these ETFs already from 2 years ago, and they all up. What else we had on the list? Portfolio weight. We got the cigar. We're gonna get to that. Exchanges. Yeah, that was New York. Was it ICE? International. ICE International. It's another exchange that was like a no brainer when you think about it. Terms as exchanges. So beginning of the year, it's one of the plays. I was like, okay, this gonna go up, right? So just no brainer comments and shit like this. You can see it's coming back down. So it's like I said, it's time to get back into these things so we can anticipate the next leg down, not the leg up, because before another the leg up, it's another leg down. So we want to gear ourselves for the leg down. Like my portfolio, my investing style is more about bracing yourself for the next leg down. All right, because we want to buy the dip, and then we want to buy the dip, and then we want to sell the pops, buy the dips, and sell the pops, and then hoping we catch another dip. And we want to repeat this until we finally go up. And that time we didn't amass a greater pile, meaning we didn't tacked on percentages as if we actually held, but we in reality we just sold the bottoms, sold the tops back in. Be able to get this type of growth in the account. We kind of got an upward trajectory. Our risk reward high, risk on, risk off. Seem like a calculator. So the next thing we looking at is we leverage just the safe plays now, the low maintenance requirement. So we're gonna get more exposure, and we're gonna have the portfolio weighted in things. It's gonna be like just gonna go up, but it's just gonna go up by a lot. So like we should have to rate the exchanges. the Nasdaq. These are the no brainers that you gotta have. Like this beginning of the year, watch this thing go to 60 from 60. Like, yeah, this is a good thing, but it was too boring for me. 50 to 40, what is that, a percent? That's low to what we're trying to do. But yeah, it's nice to have, but keep that in mind that you're approaching all time highs, but that is nothing. Think about NASDAQ in totality, what is going to be 20, 50 years from now. As long as you got that type of mindset about these exchanges, the exchanges are screaming buy signals. Thinking about long term investing for your like guns, because as we as the year wind down, said a lot of these techs gonna be on sale. So because it's not gonna be like really on sales. It's just like approaching all time highs. Like I say, 2025 gonna be filled with all time highs or them bottoms, and then all shooting all time highs. It's time to start dollar cost averaging into this shit. 414. Another one that's for bat. Apple 248. That's crazy. I had to collect them apples. Stocks for bat. You just want to get on this Apple bat. Just going everything's ripping. Like rips. Just for the rip. Chipotle as well. Did a stock split. These are gonna be no brainers in your portfolio. Be later type shit. Look them away. Buy them. But y'all got to start looking at what you get paid an hour. And start looking at stocks. And convert that into stocks. A company that's gonna be working, it's gonna be there 24/7, 24/8. While you're $15, $17, $30 an hour, $1 an hour will be diminished. So basically, if you can think of the stocks as hours logged, just get about 40 hours in these. Have 40 stocks, the exchange, just S&P, the Nasdaq. But concentrate your portfolio heavily in this shit I'm talking about that's gonna go up like no brainer. Think at it like it is your time, ownership and equity of a company. In reality, a wage, the hourly wage is gonna be worth more. For you guys that say you got a minimum job and you get paid $15. I worked at a job that got paid $15. I would trade my $15 for a company that bottomed brilliant and bought shares of this shit, 1432. At least I know that someday hours will be worth $17, $20, $86. So if you're able to lock in these hours, think of like stock ownership. And then what you would get paid an hour. Like I get paid 19.50 an hour. So anything that's $20, anything $10, look at it as like a lucrative investment versus my my return investing. Is about to get an hour. So I trade my $20 an hour, leverage that up, and I buy companies, say like QUBT that pops on my list. Let's call this one about months ago. Catch the if I caught the two, just say I could have took that risk. I get paid 19.50, 40 hours. What was that? Say $800. Could have grabbed $800 of this shit, right? And $800 would have more than 4x. That's the type of mindset. I want y'all to y'all haven't like detach yourself from the hourly wage, money. Look at it, the time aspect. What the stock market, what's the offer? What the fuck is that shit in like? What the fuck is that shit that Goku get into? I want y'all to be like Vegeta. Be saying Goku get in the chamber and shit. What y'all? All right. What y'all think of the goddamn stock market? Just like this. I want y'all to see when Vegeta behave.
This holiday, Verizon will turn your old or broken phone into a gift.
Oh, they doing too much. Try to show y'all when Vegeta be mad when he find out Kakarot already dipped off to go train. And they be like, "What?" Mm. Yeah, that's how y'all gotta be. Take that little pussy ass $400 check and go buy some shit. $2. You know what I'm saying? Fuck with me, I'ma bring you this shit. Right now, you say, man, that quantum computing ran up. Yeah, that shit ran up. Got this shit though. I brought y'all Expensify. I'm still talking about Smart Rent. Just grabbed 100 of this shit. So for instance, y'all got $14 an hour. You ain't making, you know what I'm saying? Risk this shit with me. You know what I'm saying, look at this shit. Smart Rent. Ooh, wiggy wiggy. We like them swiggy lines. You got a bull flag pendant. This shit is finna rip up. Put money on it. All right. You can see I don't own none right now because, like I say, money and other things. The moment I got up in this shit, we put it to something else, but we keep a tab. We got $1 in this shit. So my plan is to guess what? We gotta grab a couple of thousands of this shit. Why it's hot? Why it's low? You know uppy coming. That's what, let's see. This smart and shit got 100 days. These calls, these 50 cent calls. Oh, we can load up on these 50 cent calls, bro. $18,000. Five, 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 18,000. I ain't got that type. Bro. I got 14 bands though. Good. Good too. Ain't even worth it just to risk lock up 20 to get 1,000. I think shares would have been the best. Some calls. I look at long calls, bro. Definitely. These puts I wrote look like they shrinking. Thinking we can get them dropping the fives, then we'll be in good. 30%, that'd be a good sign. Got a stink bid to buy something back at like 0.1. I'll be another aviation. Rocket Lab, like Arrow, that is the same thing. Elon, Tesla. Like so, these screeners, I stay away from this. It's another tool you can like check stocks that jump crazy, and if you like feeling risky or you feeling like you wanna gamble, let's be honest, you can catch like I don't know what type of scanner you need, but you can if you can catch like implied volatility or like volume, you can detect crazy ass movements. Where what is this? This maintenance requirement. I got to account with $40,000, right? So here they won't give me a lot of maintenance, but they will let me get half. So if I had the balls to take 20,000 of this whiz key, say this shit popped and open 56%. The moment it dropped with 95, it dropped at a little 40%. You had the balls to buy these bottoms in this, and it ripped after hours. Well done, well done. Or vice versa, just come in here and just hold. So I think that takes like reading technicals analysis and like Fibonacci and all that shit. Like, sorry, like it's one thing I still ain't got. Like, because I'm trying to save the money. I'm not trying to just wipe 20%, 30%, 10% here. 'Cause that's what will happen when you do this type of way. Like when you try to go get the cookie fast, that's what happens right now. So I try to stay away to what Robinhood telling me to invest, what's moving now, and I try to go out there myself and focus on ETFs. Feel me? And when I focus on the ETFs, I focus on the ones that's down price first because price lets me know like the range. So these a lot of marijuana ETFs. So that'd be a no brainer. Cause like what can go wrong? You a bunch of companies in the ETFs, 75 cents. So this will play within itself right there. But if you want to be like there's multi asset income ETF, take things like this out. I check out the when did they come to the market? 2021. So we 2024 is about 3 years in a downturn. So in my eyes, this ETF, okay, would be a buy. All right. And the second thing I'll come up with what's going on over here, what they holding. You can see they got some cash, government bonds, volume low. All right. So when it comes to safe investing, what's the leverage? 25 million is right. This is a safe haven for some cash. All right. And the plan will be when you experience a dip, you buy it up. All right. And if you build your portfolio with like a strategy like this where you go into ETFs, all right, that's down. Market cap can be high, low, long as it experience a bottom and a recovery. Okay, for this instance, it ran up 15% from 16, the max. Moving forward, I would say this one is a pick because we thinking in the terms of $20. If you can pay $19, this drops down to 14. It's gonna be a way better return on your money. A real true buy is the 13s, 14s, but we want to get in these things early so we can dollar cost our way down into a true bottom. As we if we talking long term. So with real estate exposure, These type of ETFs with low volume, these are like way better options. $19 spending, $93 for Vanguard ETF, which is probably a nearing or experience the same type of decline. So you get this same type of bang for like smaller buck. So you get able to get more buying power. So I try to focus on that type of investing. You can go to daily movers or you can go to industries, but remember growth value ETFs. It's like Robinhood give you the tools. They want you to trade more. All right, you can go to market cap, these low market caps. You know what I'm saying? You go to inflation, theme cash. All right, cash flow champions. All right, so you can look at something like this year to date. It did nothing but go up. Last 5 years, goddamn, cash flow champion did nothing but go up. Matter of fact, all it did is go up. So this would be a perfect ETF. U.S. company with the highest positive cash flow over the last 3 years. Holding JP Morgan, Wells Fargo. This is a definitely buy, bro. What the fuck did I just stumble into? Okay, this is a perfect something you want to just have in your arsenal where you can just body dips on this. So hey, let me transfer some money. I'm finna buy one of these right now. But we know for sure we have this. I need to move this on the list. I'm finna show you how you gotta be aware and you gotta see a play. See, I'm thinking about the future and I'm thinking about a dip. So if I ever can catch this thing on a dip, this is gonna be the money maker here, all right? Like I say, the market loves to be 20% ahead. So look at it, it's positioned perfectly for a 20% rug pull. And at $25 to 30, it's nothing. That's peanuts. How much was it? All right, we should already got some money in there. All right, I'm gonna buy $32 of this. And just like that, that's how I kind of look at my plays. Growth and value. So let's just stick around. Let's check out these growth and value ETFs. I'm finna just I got a couple of dollars I just transfer. We finna spend this day doing what I do with a dollar. So right there I found a banger. I wanted one of those. So I got one of those. Now what we said, we was in low caps. Okay. We seen US cash. Let's show more funds, NASDAQ, large cap value, under 20, experiencing a little whippy whippy. Large cap value, what's in here? Logan's Pride, Altria. This like cigarettes. One was gonna be up 20%. It's gonna be a buy. Well, they got a bid at $10, bro. What is going on? I want a dollar cost average, so we're not gonna barely do that one. Another one, some of the ETFs don't allow you to dollar cost average. Growth stocks, ETF, it's too high, too high, too high, 200 is too high. You get that same ETF for a smaller. That same ETF is held, them same stocks is held in another ETF. It's way smaller. So let's check out Schwab US 25% maintenance requirement. Apple, Nvidia, they got all the big boys in here. This is a buy. This is what you want to have money into. And you want to catch these on a dip. Well, remember, I seek out buys. Okay, put my dollar into these buys. Yeah. Soldier, right? It's like a little leech. Like anytime my soldier is in danger, you know what I'm saying? Red, I come soup and I hey. So I got a dollar in. If this dips, if it want to dip to 26, I'm gonna come in and I'm gonna buy $5 worth, $20 worth. That's how we gonna dollar cost average in these things. It's gonna be for sure buys. And the only way to know is you gotta have a bunch of low dollar soldiers experiencing dips in the market, and you gotta come double back and buy water. It's like watering yellow plant. Let's see. Can we can keep finding little cheap ones. See the momentum ETF. Everybody's Nvidia, the same ones. The emerging markets. All right, emerging markets. This will be a buy in my consideration. All right, so what I see is I see a trend, heavy support is 40. Right? So I see a rip to 50. All right. So I'm $5. I'm in the middle. Go $5 down or $10 up. I'm basing what all time highs is coming. Right. And when I base on the all time high, the dip before the rip gotta come. So dip down to 30, we can rip back up. That's above 50. Would I look? I own some of this, so I would know. Yeah, I'll go on to 40 in the 30s. That's definitely a buy for me. So yeah, it'd be a buy. Like I said, I got so many of these stocks. Like I probably own some of this shit with a dollar already. And right now is the time to go up and dollar cost averaging these. So I could probably just go through my portfolio and I probably just, but it just takes so much time. Robinhood needs to simplify that where we can like put all this shit in the category. Like I want to select everything I'm down certain percentage and I want to buy $1 of it all right now. Like make this shit simple. We got some money, but let's see. These shares are extended. Okay. Outstanding shares. I didn't even know. Vigo Broadcom got what? They got 1 billion shares outstanding. Jesus Christ. The calm. What did we stumble unto right here? Oh yeah, yeah, yeah. We gonna play with this. Stock high experience oh yeah, yeah, yeah. Let's get in this. .com. It's gonna be a move Monday. Take our dollar and let's remind us. So I see a stock high experience. Just seen what happened. Maintenance requirement is 25%. Alvo 230 from 170. You say 270? Did I read that right? What about one of those right now? Upgraded to 270, 230. Yeah, yeah. Let me buy one. Let me just buy one of these right now. Alright, let's just buy one share of these. Oh no, I want to do off the market, bro. Wait, let me see. I got 24 hours. I got 24 hours. Broadcom gonna be definitely a buy. What else? Marvel Technology. You know how they have so many shares outstanding too. I'm gonna put this on the list. I own some of this. Damn, it has been going up. 90. Ooh, that was a dip. We was experienced at 68. What is the bottom? Marvel Technologies. What is this? Which cost? Uh, I'm ready to put that sticky note up there. Oh, that was some bangers I was just caught. Broadcom. Okay, I did shares outstanding. That was over 500 million. Over a million. We got UBTS. That's what I was just watching. Quantum computer. Oh, there's something else. Jeez. Okay, this is a different strategy. What are we doing right now? This strategy is playing with like shares outstanding. Heavily shorted. SoundHound is a damn. SoundHound is at $17. I always could have bought so many thousands of SoundHound at like 5, 6, 7, bro. What the fuck is going on? Jeez, this AI shit. This oh, no. What the fuck is the AI ETF? What are the AI ETFs? Load up on the AI ETF, boys. No, we need something that's holding this shit. Is the arc holding them? They bots has always been one. Knew about bots. Autumn was in bots at 19. Yeah. God damn, SoundHound crazy growth, bro. Jeez. Look at this shit. 100 shares, 600. Autumn was 6-7. Sold them and got out of there. E3 AI, another one that Bruce was talking about. Get in the year. $21. $30 right now. Oh my God, C3 AI. Not even what's the name yet. Just on the list. We're gonna be in some AI this year for sure. We cannot let what SoundHound did. Energy computing, Archer. Damn, Archer even on there, bro. I know Marvel is a good one. It's the same one we just had. Yeah, that is funny. Chill, we gotta chill, we gotta chill. Return. Damn, but it's a buy. So it's gonna be cloud AI. Some of the financials for financial dip and this tech dip for 2025, bro. I see it now positioning from cloud and AI, bro. 'Cause Soundhouse, Team Planeteer, another one, bro. These could have bought this shit at 60. I thought it was too high. Planeteer going to 100. Yeez, could have bought this shit at 7. That makes you think about SoFi at 7, bro. Yeez. Definitely gonna have to get serious about this investing. Definitely gonna have to get serious about buying these bottoms and creating a new list. So I'm gonna have to kind of remove all this, all this I got here, and I'm gonna have to focus on a very selective few when I go in. So I'm gonna have to start making a list and like really keeping tabs of allocating these stocks. Or I might just have to just start doing it in my Roth, or so we can see a clear difference when we hold them. Because I'm just seeing crazy growth, and the time is just crazy. Like damn, we could have been up. We held on to some of this sound how some of these stocks that we had at $4, $6, and they now 16, 15. So it's just like the power just buying the whole still prevails, bro. Like, jeez, I'm here for a good time. Fuck it. Maybe you should be here. You should be here for a long time, motherfucker. Check this shit like Rivian, bro. I guess once you see a stock pop, you keep thinking, is it too high? My guess is gonna be no, motherfucker. It's gonna be room to grow. Stock is valuated at its price in the future right now, and that changes every day. So it's not even trading at it's it's today's value. It's trading on the future value. So you gotta understand that about a stock. It's not even based on the price today. It's based on the price in the future right now. So if anything changes, it changes that stock. So that's like what we just seen with this Broadcom. Analysts gave it an upgrade and instantly popped 24, 44, $44. So you can't time this. And look, you see that it was a dip for that rip. Let y'all see that it was a dip before that rip. So don't be afraid of them dips. Just know something big coming. My portfolio, we experienced a little dip. I knew how to handle that dip. And look, we're bouncing back and we going even higher. All right. But understand that once you get a portfolio to this level, we got 40,000, 80,000, 120,000 in margin. We trying to go off after them stocks. We just went out. Like I just showed you. These Expensifys, these smart with rents, these SoundClouds, when they're trending $2 sub, $2, $5. All right. They coming when they're back trading 14, $8. The day coming. Can you hold these bitches long enough? My thing is, yes, you could if you can separate yourself from the money. If you can not tie the money to something else. If you can leave that pile of money right there and create another pile. So what I'm trying to do is create my piles of money and leave them there, not use them to get another piles of money. Now that worked good for the SoFi. Now I'm trying to cut back. So we locked up 60,000. Now this new pile of money I'm generating is gonna be for instances like this. This 4,000, this 6,000 is staying on Expensify. This 3,000 is staying on Smart Rent. See what I'm saying? Because we is projecting, you know what I'm saying, a better outcome. Hands down. It's just a matter of time. Win Moon, win Lambo. When we thinking like this. Look at the sound how. Look what the fuck. Beat the fuck down. Year to date, 170, 190. All right. That just hint that's what Smart Rent hang trading at 180, 190. All right. Up 600%. Don't let it be you. Don't let it be us. Don't let it be me again. That's what don't. All right. This is how this shit works. These stocks be trading at all time lows and nobody gives a fuck about them. Whole time institutions loading up by the millions, thousands. I'm telling you, put your 4,000 here. Thank me later. This shit, this best in that easy. I be in these places. You in these places. You in them out. You think, oh, that's the bottom and top is over. Wrong as fuck. Shit just be getting started. But yeah, man, that's this how this investing shit. That shit don't get you pumped. How you can take a portfolio from like 3 bands to 30 in a couple of months, Come on, bro. You wildin'. Everything gotta change. The way you think of life gotta change if you can understand this stock market shit. If I can take 40 bands and buy some shit like Smart Rent, Sound, all right. How many can I get for 40,000? I can get 21,000 shares of this shit and just go to work for a year. Just say I lit the money on fire. Fuck it. You see what I'm saying? Long as I did my research and know this company is prized and positioned to go upwards, we in a better position when we tagging in inflation, bills, and all this shit that you're gonna have to pay for in the future. This the type of shit that straight evaporate, annihilate all bills, all contracts in the future if this shit goes up. You'll be financial free and able to do whatever the fuck you want. This is what I like to position my portfolio. Bangers like these. It's rebust fucking time bombs, bro. Now we at a level 40,000. We approaching level 60,000. Hey, it finna get real spicy. We finna be able to grab shit like Yex that we been peeped. We watching this shit trickle up, go back down. Alright. It ran up 30%, back down 30%. So I'm feeling like the yeah, that easy. What is I'm really waiting on? Give me another dip. Get it back down in the forest. Bring me back down here. Show me it's real. If you bring it back down here, I'ma buy it. I'ma buy it up. All right, and I'ma hold it this time. But that's what you gotta understand. The market gives, the market takes. Just like that, you see me going down in this strategy, going through my portfolio, looking at these losers. Let's just drop crazy. I'm just choosing to buy some. Some not that crazy drop, so it's not even worth it. Like donut, this is definitely a worth the buy. Dunkin' Donuts, Krispy Kreme, yeah, under $10. Oh yeah, this is a perfect value opportunity for Krispy Kreme donut. Was actually here when it came to debut, and it popped to 20 and it dropped back down. I'm all like, that was a buy. Yep, sold it off and it did it again. So anytime Krispy Kreme, buy. Let's go. That's $20. Okay, this is a perfect example when I mean, say you make $10 an hour. The train was trading at 16, $20 an hour. If you was making $10 an hour, you can invest in Krispy Kreme, right? In theory, if you manage to lock 100 hours, 40 hours a week in Krispy Kreme, like your hourly pay, that shit can one day be worth $19. So you can already 1x right there by just having an investing mindset. So that's what this is how I treat money. Money is just indifferent. I look at the price, look at the money that I traded time for, say, there you go. About this company. So boom, I bought $20 of this. I'm down 10%. We gonna dollar cost average in here, and this should bring our average down well into the nines. Just like that, we making money. Don't have time to do this often to go through my portfolio like this, like I'm doing right now. Like water, these losers, lithium, great tech, a little wipeout. Full flag right there. I forgot that it's a buy right there. 20. Mm, Water this one with a can. Intel, we grab down. We go double down. Intel, Tiger, we CMG. Grab some CMG. We're gonna have to pull Chipotle up on the list as well. Nice on Chipotle. It was in at 56. It kind of ran up on us from that 3 months mark when it did the split. Yeah. 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 Still a good time to be in Chipotle. Anticipating a drop. They're gonna run this back up. So this is about 4. I'm gonna end it at Chipotle. That's gonna be my last, I believe, because that actually was the ones I was trying to go after. Kind of moved them up in my list so I can like find them. Honorable mentions is Lynch Fantech is 176, bro. Like, I'm telling y'all, bro, this smart rent, these things that's like 180, y'all gonna be like, bro, this nigga one line, bro. These were no brainers. What the fuck were we thinking? Bro, pick this shit up. Say I don't have the funds right now. I'm tied in some other shit, but best believe when I get the funds, I'm grabbing this shit up. This shit that's pennies. Grab a couple of thousands of this shit. Yeah, this shit is going up. Opportunity to double down on this shit. I thought the fours was too high. Oh, opportunity to double down on the threes. After they just ran from the 190s, I thought the threes were too high. When if we jumped to the fours, I thought the fours were too high. Going higher. Some fintech. So many plays, y'all boys. So many plays. I can't call them all. I can hold them all. I got my dollar, but it's not gonna be, or my return on investment not gonna be enough. Really gotta up that risk. AMD. I've been looking at AMD. They said AMD dip. Perfect. You definitely want to own some of this shit. I lied about Chipotle. We got some AMD. Okay, this perfect. When I mean a tech sell off coming, I mean these days like this, take advantage of it. 26 MD. See that I got 88 cents in here at 143. I'm gonna come in and we gonna buy into some of this AMD. $50. I'm doing that. I want to get an Nvidia too. Then Nvidia Spencer and dip too. There's gonna be a little bloodbath around this time of the year. It's perfect for y'all to come by this. What we can do, we can come in January, February, right? And we can just do a slow bleed off, right? Come in January, market can just beat us down, be right back here, just to rip him higher. So, seen this shit happen so many times. Don't get afraid. Don't get chicken out your position. Just know that these are times that you just need to go down. So right now, I'm gonna spend my last. Oh, use my last remaining buying power and purchase Nvidia. What I did is I purchased $43. You see that is from there, just 100 left. So I got like point 0.3 of this shit. This what I mean by dollars cost averaging. This is how you making the money. Buying these retracements, anticipating the recovery, and you selling off. That makes your portfolio go up no matter what. You buy a retracement and sell off. Okay. You buy the retracement and you sell it off. Portfolio grows. This what I do. Rent. This is proof. You know what I'm saying? You got this far in the rent. Basically, what I do. You see what I spend my time doing? Got tabs up. I'm looking at stocks, charts, and I'm focused on the ones that's experiencing a slight downward trend, across averaging in, anticipating the upward move. I can lock in that percentage game and keep tagging it on. Right now, we at 703% this month, and we gonna be pushing this shit to 3,000. I mean 1,000%. All right. So the goal is to make another 35,000. We make another 35,000. That'll put us at 76K. 76K gonna put us at about motherfucker. We made it. We gonna put us right there. 150K, 160K margin balance. Right now we got this shit locked. Kind of options. We got 60K options locked. All right. Individual cash 58,142 locked. Let's get into some goddamn Warren Buffett. Cigar bang.
Warren Buffett's cigar
We gonna see what he talking about.
The cigar butt net investment strategy was one of the early investment approaches used by Warren Buffett before he met Charlie Munger. This approach involved finding companies that were trading at a significant discount to their liquidation value, which meant that the company's assets were worth more than the market was valuing the company as a whole. Buffett's cigar butt strategy was based on the idea that even though the company might be in a difficult position, there could still be value in the assets that could be sold off. He would look for companies with a strong asset base, but which were undervalued by the market due to the short-term issues such as declining sales, operational inefficiencies, or financial difficulties. Buffett's approach involved buying these undervalued companies at a significant discount and then holding them until the market recognized their true value. Once the market value reached the intrinsic value, he would sell his stake and move on to the next undervalued opportunity. This approach allowed him to make profits on investments with a relatively low risk, as the underlying assets of the company provided a margin of safety. However, Buffett eventually shifted away from this strategy as he began to focus on investing in high-quality businesses with strong competitive advantages and long-term growth prospects, which he believed would deliver sustainable returns over the
I know it's flaws to everything. flaws to this strategy was that boy was missing out on billions. He was just held that shit. So even he say like, damn, I should have held that shit. So in the stock market shit, we all do the same thing. You be buying this shit, selling that shit, boy. You could have just held that shit. So just detach yourself from the money, y'all boys. Like, set that shit go. Get about it, bro. Sell some of that shit, but buy back in, bro. How you begin a successful trade in your career? Let's do it. Let's see what he's talking about. My career.
So, Anton, we've just spent the day in the city.
Yeah,
We revisited some old haunts today.
yeah.
You're obviously looking back on it with the perspective of someone who has spent a lot of time in the city. As a young guy, how did you come into it and start and actually figure out?
Bro, why he be look like he be bro? He look like he be loaded. He be partying, bro. That nigga, let me put his nose in it.
The world of trading?
That's a good question. Like figuring out the world of trading. Wow. Okay. It took a long time. I started as a
Whatever you fucking chat. Hey, I gotta give me a motherfucking suit. I'm gonna give you a motherfucking suit. I'm be talking this shit on Wall Street. I'm gonna get a motherfucking suit, man.
retail trader,
We come to Thailand, we get the motherfucking suit. And I think he be doing a little shit in Thailand.
and I was trading with my own money as a teenager.
It's message. Trade with your own fucking money. Ain't no motherfucking what's that shit called? Counts, phony counts, fake money. Now fuck that. This real money. This real time in this shit. This real emotions in this shit. This nigga balls. This shit creates a whole different breed when it's your money.
And then went to university, carried on, and then was hired by Goldman Sachs. And I never really
I went to college and shit. You can see the degrees and shit, but it's not financial related. But I was brought up in like brought up in like a saving financial environment. My granny worked in the banks, Chase, Bank of America, J.P. Morgan. So I've been exposed to these type of guys in my childhood on the 100th floor in buildings in these rooms where they just staring at computers and you see the calculators and ticking. So that did have a impact on me, but I never understood what it was. So these guys always looked at me as like, poor kid, Chicago, he's not gonna make it, no chance. You know what I'm saying? But I was always intrigued in the finance, and my granny being like a female black lady in finances at this time. It's like she was already taking on a lot of stuff. So the fact that she to bring her grandson, it was more like a steering me the right way. So I was actually in banking and exposed to these type of guys, looking down, in the skyscrapers, on how elevators going to the 100th floor, 50th floor. I'm just like, what the fuck? What's going on? But now realizing, looking back, like, oh shit, I always was a finance bro.
started genuinely figuring it out until I was actually in the city. Because there is an investment spectrum. When a professional trader uses the phrase investment spectrum, what they're talking about is on one side,
Never heard that phrase. Y'all not good with words to show y'all pictures. Okay. Business as usual, destructive, impactful, social enterprise, non-resident, generous, investment. Financial exploit, impact. I'm trying to see what he's saying. Grant support, senior loan, soft invest, capital protection investment, commercial return. Okay. Okay, I see what he's talking about. So basically, this shit can go 100% risk free, then a little percentage. But basically, the grant support, private equity, that's the shit. Okay, I say okay. Then you got the cash, and then you got fixed. Okay, I see. So basically, the pools. Okay, I got you.
All the way over here on one extreme, you
Pools of money pools, tax advantages, the leverages, different pool powers.
have, for example, value investing. And then all the way on the other extreme, you have short-term trading. And in between, you have many other things, many other strategies, many other.
So I'm trying to tell y'all, you gotta equip strategies. You gotta have a playbook. This market is motherfucking moving. This code, this algorithm trading. Where the fuck it's doing this shit so fast within like a millisecond, bro, that it's fucking money to be made, bro. Not just one strategy work.
Time horizons, and trading these days has shifted from short-term trading to a time frame and an approach which is
The best edge we got over these computers, these robots, just like he said, it's a time aspect. Is they can't do long time trades. They can't process the processing power. The machine's not big enough for them to do long term trading. So everything gotta be rug pull, flash crash, recoveries, pulling liquidity. Everything gotta be fooling you to be over leveraged in a time where you shouldn't be over leveraged. It's all about inversing the inverse. Y'all ever fucking bro? Wall Street bets. Come on, basically, bro, do the opposite, okay? I found it. This is perfect. This is oh. Okay, this is some motivation. He bought a 157 contract, which cost 0.06, 17 band. Always inverse Wall Street bets. But yeah, just like that.
encompassing a lot of different strategies. And professional trading strategies now are like 1 to 3 months, unless you're quantitative, okay? Once you go over a certain time horizon, it stops becoming trading and it becomes investing, okay? Once you focus on the time horizon that still encompasses trading, there's many different strategies that you can deploy, okay? And yesterday we talked.
What do you say about the trading aspect? I can't show you, but I can show you on the tablet. I did a lot of trading. Yeah. This right here, this is trading. This is me putting in the buy, putting in the sell, putting in the buy, putting in the sell, locking in them gains, trading. And now I move from trading. I'm trying to move from this trading mindset. All right, because you can lose in trading. You can lose percentage, and it don't take a lot to wipe you back down to your start at my initial start off 7,000. It don't take a lot if I can't manage my risk appetite, my newfound mind power. You know. So look, if I go from 7,000 and then I was used to 10K margin, 20K, and I go from 40,000, right? And I'm exposed to 120K buying power. I'm gonna be too leveraged, overweight in sectors, and I'm not gonna be able to tolerate, stomach those 5% retracements. So I was when my portfolio was at 7K holding. Now I'm holding 40K. So these 5K retracements, and now I'm being on margin. Just a, it's a not useful way capital in the long run. Like I'm trying to preserve and have longevity in the stock market. So you gotta learn to when to go on risk off, go from trading to investing. You know, these cash secure puts I wrote after I sold off was my approach in going to investing. Okay. Going into 2025, we going to the investing. We made it trading. And you know I'm a trader. Now we trying to get the investing aspect of it, anticipating a bottom coming, and we're gonna trade the fuck out that bottom. Investing.
About, for example, when you asked me about the education of what traders would need, like joining the industry. The first
YouTube, money, getting in it. You need to know you do this shit. You need to know the emotion. You need your money in it. All right. YouTube, money in this shit. Right? And your track record, that's going to show in your trading and shit.
first step is always to get like a broader overall understanding and broader education.
Even that's what I'm saying about YouTube, because when YouTube is doing what I'm doing, I'm trying to show y'all what I do, a broader understanding of the markets, the market players, the market factors, the ways the market, all these, the market makers, payment for order floor, all the pulling liquidity. I'm looking at everything in totality in the whole. Just a one funded, one mind guy.
Okay. The next step is actually finding that sweet spot within trading over those timeframes that are trading, not investing. Finding that sweet.
So what he talking about is those sweet spots, like I did today. We spotting things that implied volatility is high. We spotting things that are at its 52-week bottom lows. That's when we trade, switch from the investing approach to a trader approach. Things have massive flash crash, just news. That's when we go back to that trader mindset. So you got to learn when to risk on, risk off.
Spot that suits your personality. And this is something we always push in the Institute. It's like you have to have a systematic process. You have to understand that you need a broader perspective. Not everybody is suited, for example, within the trading spectrum to short-term trading. Not everyone is suited to long-short portfolio management over a 1 to 3 month time frame. But if you get the discipline and the broader education first, you can always adapt and always be flexible.
I was just going to tell you, if you do what I did and got bit by this investing bug early, what I mean is you managed to open up a Robinhood or brokerage account, right? And the first lump sum money you put in there, you make money. Wrap. You'll never be the same again. Puts $10,000 in, bought Dogecoin at 0.06, about GameStop at 9. Was it 14? 14 something, 19 something. Shout out to 40. So I've been high ever since. Nothing can bring me down from 1,000% return. Nothing can stop me from chasing the next 10 bagger. Nothing can stop me from gearing up and hitting the next 10 bagger. The next 10 bagger is in reach. Stocks going up 100% every day. You just need 4 of them, 5 of them. Capable. And you need to specialize in buying the retracements, locking in them profits when they pop to 40 to 60 to 40 that they all do. You need a basket of these stocks that got this volatility behind them. If it's so, it's not about if and when, but it is about when the fucking shit goes up. Yeah, man, you gotta learn this shit. You gotta really understand this shit. I'd be able to take us advantage of situation, just like hedge funds. You gotta learn to understand when it's blood in the water. Like, hedge funds go under. It's other hedge funds on the other opposite of the trades, bro. Not letting them out.
Flexible if something's not working. You understand how a systematic process works. And then you can shift your systematic process over time to adapt to market conditions. And actually, like mentors that we have right now,
Now my market shift mentor we have now right now, Uncle Bruce. My market Uncle Bruce. Telling us, screaming at us. Uncle Bruce screaming at us.
How are you? It's Uncle Bruce here. Welcome. Welcome to Monday, November.
Telling us. Hey, cash secure puts markets at an all-time high. Certainty is coming. Listen,
because they've done so much in the past and so many different things within the trading remit. Guys like Tristan, for example, have been long-only managers. They've been long-short portfolio managers. They've been short-term traders on trading desks of hedge funds. And actually, a guy like Tristan would be amazing to speak to about this. And he actually gives a seminar in Australia, literally called Matching Personality to Process, where if your personality is more suited to things, you should be concentrating on that. But you shouldn't concentrate on it from the outset. Retail traders jump in to short-term trading typically because they think that this is what they have to do. Or they jump into stuff that think their personality is matched to from the beginning.
what he's saying is straight head on, bro. My personality, my risk tolerance can't do boring ass bonds, bills. Like look at this shit. We want Lambo. We don't want to still be Poe. Is this fuck? Look, light this shit on fire. Something. Throwing my money in the market. Do something. You talking about? Our generation, we so detached. We know there's no chance on retirement. Already fucked this up for us. Generation that understand the power of a fucking YouTube, content creating, laptop, podcast, can get fans, whatever the fuck you doing digitally making money without going to work, you get the shit. Next thing you just gotta get is invest in this shit. Okay? Third thing you gotta get is in the job, using that like a job. Okay? To fund this goddamn Robinhood. Right? Brokerage shit, this investing shit. Once you can tie all avenues into and plug it into Robinhood, that next thing you want to do, you want to open up a business. You know what I'm saying? Focus lies on like building a brand, qualifying for business grants, business loan, and you want to plug that into the Robinhood. That investment money, the student loan money, and you want to plug that into your brokerage account. You want to put that on the margin. You want to take the same as you buying these dips, like I've just been telling you guys. How you want to rock? You're gonna print money, percentage annual return that the interest rate they got you paying back is gonna get obliterated. You're gonna get a 400% return, 600% return. Fucking with me, I'm telling you. You see my account. We showing y'all like, come on. We not here for the little shit. We hitting 40s, we hitting 30s, we hit 10s. This is no brainers. We hitting 300. You know what I'm saying? It's like somebody telling you, you fuck with me, we going viral. Yeah, yeah, yeah. But when you fuck with me, we going up. Right?
beginning. And they don't realize that when they start doing things, either it doesn't pay, as in it doesn't work, or their personality is not suited to it, and they have to then continue finding what actually works for them. And it's all about hitting that sweet spot. Now, the Institute's education, for example, gives you that broad.
Now, me was hitting that sweet spot. The job within range of the house. Like, in that job, won't interfere, impede on my trading hours. Meaning, work until market close. Work till close, 30 minutes to market close. So I'm in the market majority. So two things got to factor into this trading thing, and the pay is what you're actually doing. Job is not really physically demanding, just a waste of my time. The $100 I make for 8 hours a day, which is what I can be spending YouTube finding the next stop. When that 8 hours a day pay out way more than my job can do, since I already made 40, 35K this month. That'll be more than my job paying 6 months, 7 months, 8 months. Made that in a month. So now I can't look at my job the same. Look at my time. I'm wasting my time at my job right now. I could be focused on my trading career, focus on the next opportunity that the market is gonna present. I just need to be managing portfolio. At the same time, I understand that about cash flow, and I need the job steady, tack on, add to the like cash flow and a percentage. Things that we're gonna continue to do because as long as we keep working, as long as we keep investing, as long as we keep growing, like common sense, but it's gonna be a time where we like, fuck, we're doing it for. Christmas is coming up. Sell out all the money. Get Christmas holidays. So roll cash secure puts. Good. See you next year, market. We haven't moved. We still at this 41, 60K, holding 60K. And until then, we're gonna be learning. We're gonna be hopping in this hyperbolic time chamber, bro. And we're gonna advance our trading career.
Education. And then within that systematic process, you can actually go out and find where your personality is best suited within the process. So it's very, very flexible. And if you speak to Tristan about it,
A lot of the mic off. All right, fuck it. Look, a lot of y'all gonna be dumb money. Hey, this is what the world looking at. Look, this shit. Look, I got two screens. Look, two screens. Look over here. Mic. Let's make the mic red. Fuck it, I can't get the red one. Dumb money, bro. All about the dumb money, bro. It's all on us. It's all we're trying to do. Uh, like so much, so much. We got like 30 seconds.
He'll give you some really good tips on how this works. So if you get 5 minutes with him at any time during the week, definitely speak to him about it.
All right, them videos right there. That's just how it be. Bunch of videos like that. It's usually how we doing it. Be watching shit like this, capital budgeting. It's just like nonstop shit like this to stay on top of this shit. What makes a great trader? You can see a lot of Institute of Trading videos, a lot of MIT Open Courseware, a lot of portfolios, stocks, bound information that I'm devouring daily, bro. So I'm gonna bring y'all more of this type of content. We're gonna react more to this shit. Catch it next time, bro. King Lamont Valley TV. You know how it is. Stay down till you come up. Let's see what we trying to do. We trying to run it up, man.
Life is like a hurricane here in Duckburg. Race cars, lasers, aeroplanes. It's a duck blur. Might solve a mystery or rewrite history. DuckTales, woo! Every day they're out there making DuckTales, woo! Tales of daring, do bad, and good DuckTales. Danger! Watch behind you. There's a stranger out to find you. What to do? Just grab onto some DuckTales. Woo!
What? Subscribe, man. For 100K Robinhood portfolio loading. Yes, sir. Stay down till you come up, man. Catch y'all last on the next one.